These are in listen-only mode.
Okay, it looks like we were having technical difficulties, so let me try this again. We'll go back. I apologize. All right, so let's try this again. Again, I'm sorry about that. We had some technical difficulties. So good morning. Let's get started. My name is Megan James, and I am the Human Resources Consultant for Extra Help, a workforce management resource. You have joined Extra Help's Workplace Excellence webinar entitled Understanding the ACA Compliance Challenge. The Workplace Excellence webinars are an exciting program for us at Extra Help for our clients and colleagues to manage workforce changes and increase workplace efficiency. A few things before we begin. This webinar will last between 45 minutes and 1 hour. You are set up as listen-only mode, but there will be an opportunity to ask questions at the end. Questions can be posed throughout the webinar using the messaging function of GoToWebinar. At the conclusion of the webinar, I will allow some time to answer the questions that have been posed. So let's get started. So today's agenda will focus on the following: the purpose of the ACA reporting, the applicable forms, due dates, and extensions for reporting, the penalties associated for noncompliance, the information needed to complete the forms. Specifically today, we're going to focus on information needed for forms 1094C and 1095C, how you can prepare for year-end reporting requirements, and extra help solution to the ACA compliance. The Affordable Care Act requires all individuals, unless exempt, to maintain minimum essential coverage or pay a penalty for not being covered. Minimum essential coverage includes all marketplace insurance, most private major medical plans sold outside of the marketplace, Medicare, Medicaid, and CHIP, which is the Children's Health Insurance Program, most employer-based coverage, and more. With the Affordable Care Act, reporting is necessary to determine whether individuals are maintaining minimum essential coverage with their health insurance. The employer mandate of the Affordable Care Act requires that applicable large employers provide minimum essential coverage to full-time employees or risk a penalty if a full-time employee receives a tax credit or cost share subsidy. The tax credit that can be received by individuals is a refundable tax credit designed to help reduce the monthly payments of their insurance coverage, while the cost-sharing subsidy is designed to minimize the individual's out-of-pocket cost when they go to the doctor or they may have a hospital stay. Applicable large employers are companies with 50 or more full-time employees or equivalents and are required to report to the IRS regardless of their health coverage offering. So a full-time employee is any employee who works at least 30 hours of service per week or 130 hours of service in a calendar month. Keep in mind that full-time equivalents are also calculated in the applicable large employer status. To determine the number of full-time equivalent employees for each month, what you will do is you will combine the number of hours of service for all of your non-full-time employees, which can be up to 120 hours per employee, and then you divide that total by 120. In the next slide, I will go over that equation and show you an example of how to find that number for your full-time equivalents at your company. So employer reporting is necessary to the IRS in order to determine two different things: whether the employer is in compliance with the Affordable Care Act mandate, and to determine whether an employee is actually eligible for that tax credit or possible cost share subsidy. So this slide, we're going to review how to calculate full-time equivalent employees for each month. So what you will do is you will combine the number of hours of service for all non-full-time employees, which is up to 120 hours per employee, and divide the total of that number by 120. So the example I have here listed, it says Company X has 40 full-time employees. Company X also has 20 part-time employees. These part-time employees each work 60 hours per month. So we're going to take the 20 employees and multiply their hours, which is 60 hours per employee. With that number, we get 1,200. We're going to divide that by 120, which then equals 10 full-time equivalent employees. So therefore, Company X has 50 full-time equivalent employees, because 40 of those are full-time employees and then the 10 are full-time equivalent employees. The forms below will help the IRS monitor compliance and assess penalties when necessary. Today we are going to focus a lot of attention on the 1094C and 1095C forms, which are required to be filed by self-insured and fully insured applicable large employers. So the forms used to report health coverage information to the IRS include the 1094B, 1094C, 1095A, 1095B, and lastly, the 1095C. So the first two forms we are going to review today are the 1094B and 1095B, or 1094B, I'm sorry, and 1094C forms. The 1094 forms act as the transmittal, or what I like to call the fax cover sheet, for the 1095 forms. This particular form we see right here is the 1094B form, which is the transmittal of health coverage information. This form is used as a cover sheet by insurance providers when they send the IRS information about who has coverage that meets the standards of the Affordable Care Act. This form must be filed with the 1095B. The 1094B is used by non-applicable large employers, so employers with 50 or less employees who are reporting for 2015. The health insurance provider will issue this form by providing the name of the company, the employer identification number and address, and the name and phone number of someone that the IRS can contact if they were to have any questions. So again, this is the 1094B that has to be filed with the 1095B, and these are done for companies with 50 or less employees that are self-insured. The next form, the 1094C, is the transmittal of employer-provided health insurance offer and coverage. This form is also used as a cover sheet by employers when they send the IRS information about coverage offered to their employees. This form is for fully insured, applicable large employers and must be filed with the 1095Cs. The employer files this form to the IRS, which includes information about the employer, how many employees have that insurance coverage, and how many 1095C forms are being sent with the transmittal form. So as you can see here, this transmittal form is much more in-depth than the 1094B form. The 1094C is 3 pages in length, and later on in the presentation, we will discuss what each section of this form means and what information is required for each section of this form. The next form we're going to review is the 1095A, which is the Health Insurance Marketplace Statement. This form is for individuals who enroll in a qualified health plan through the health insurance marketplace. Typically, this form is sent to individuals who had marketplace coverage to allow them to claim premium tax credits, reconcile the credit on their returns with advanced premium tax credit payments, and file accurate tax returns in general. The 1095A forms will be issued to individuals and filed by the Health Exchange Marketplace. So there you can see the 1095A form, which is for, again, individuals who enrolled in a health plan through the insurance marketplace. The 1095B form, health coverage, is used to report the type of non-marketplace coverage you have, dependents covered by your insurance policy, and the period of coverage for the prior year. This form is used to verify that you and your dependents have at least minimum qualifying health insurance coverage. This form will be filed by either the insurer or the employer. Again, the 1095B is filed by a self-insured, non-applicable large employer. That means the employer has 50 or less full-time employees and/or equivalents and has a self-insured plan. Self-insured employers will be impacted greatly by the ACA because they have reporting requirements on a much larger scale than employers with fully insured plans. So the next form we see here is the 1095C, the employer-provided health insurance offer and coverage form. This form is for all employees who are offered employer-sponsored coverage. The 1095C identifies the employer and employee, which months throughout the year that the employee was eligible for coverage, and the cost of the cheapest monthly premium the employee could have paid under the plan. This form is issued by the employer to each employee. So we have briefly reviewed the 1094B and 1095B, the self-insured forms for non-applicable large employers, as well as the 1095A, the Health Exchange Marketplace form And then the 1094C and 1095C forms, which are the employer-provided health insurance forms required for the IRS and for the ACA year-end reporting. So with that, obviously, all of these forms have a due date. So those due dates are: all forms must be sent to recipients by January 31st of 2016. Keep in mind that this is the same date as to when the W-2 and 1099s are due to recipients as well. Recipients must receive hard copies of the form unless the employer acquires affirmative consent for electronic submission. So unfortunately, the W-2 consent for electronic submission does not count towards the ACA consent for electronic submission. So it's a separate consent form that will have to be filled out from the W-2 consent form. Forms must be filed to the IRS by February 29th of 2016 if paper filing, or by March 31st, 2016 if filing electronically. If you are an employer who will be submitting 250 or more forms, the IRS requires that you file all of those forms electronically. If filing it electronically, keep in mind that the program used to file ACA forms is not the same as the filing system that you have been using for other tax forms. The system used to file these forms to the IRS is called AIR, A-I-R, and it stands for Affordable Care Act Information Returns. There are 4 important steps to prepare for e-filing using the AIR system, so I'm just going to review those briefly. So the first step with filing electronically is you want to identify who's going to be responsible and who's going to be the contact for filing these forms to the IRS. The next step, you will want to register with the IRS e-services, which is the AIR. And then the third step, you will want to apply for the transmitter control code. It's called TCC. You have to apply for this code in order to file electronically via the AIR system. And lastly, all filers must participate in a testing. So this is important because it requires the transmitter to prepare transmission in an XML format, submit it for processing, and receive a receipt ID and obtain the acknowledgement and attached error file if applicable. So that's something I cannot stress enough how important it is, because this is new to most employers. It's great that the IRS is letting them test the filing system first before everyone starts trying to file at once come January, February, and March. So after you do the testing, you're all set up to file the ACA tax forms electronically. All right. The IRS has recently announced that employers will be able to request an extension of the Affordable Care Act filing deadlines for filing information returns with the IRS and furnishing ACA statements to payees. The forms that can be extended include the 1094B, 1095B, 1094C, and 1095C. Employers will be able to request an extension of the information return filing deadline with IRS Form 8809, Application for Extension of Time to File Information Returns. So this form is actually already used to request an extension of the filing deadline for forms W-2 and 1099. The IRS, I checked yesterday, they've revised this form to include the boxes that can be checked for ACA information returns, so you can request that extension for the ACA specific forms. The IRS regulations allow filers to request an automatic 30-day extension of the information return filing deadline on Form, again, 8809, and an additional 30-day extension if the first automatic 30-day extension was granted by the IRS and if the additional extension is filed before the expiration of the automatic 30-day extension. So again, if you believe you'll need that extension, I would suggest getting on the IRS website and really looking at Form 8809 and what information is needed to fill out that form. So there are multiple penalties associated with the Affordable Care Act, and today I'm going to focus on the penalties associated specifically with the IRS tax forms. So the first penalty listed is the penalty for failure to file an annual return with the IRS and or failure to furnish individual statements to all full-time employees. So for 2014 reporting, the penalty was $100 per return. And for 2015 reporting, the penalty has been increased to $250 per return. The second penalty is listed is the annual cap on penalties for each year. So for 2014, the penalty was $1.5 million. And this year, the penalty has unfortunately doubled to $3 million. The third penalty listed is the penalty for failing to file and or furnish corrections within 30 days of the required filing date. So for 2014 reporting, this penalty was $30 per return, and for 2015 reporting, the penalty has increased to $50 per return. The next penalty listed is the penalty for deliberately not filing and or providing any reports at all. So no maximum fee is applied to this particular case. And so for 2014 reporting, this penalty was $250 per filing. And for 2015 reporting, this fine has also doubled to be $500 per filing. So the next penalty listed is the penalty for applicable large employers who do not offer health insurance to employees. So for 2014 reporting, this fine was $2,000 per employee. And for 2015 reporting, the fine has increased by $80 to $2,080 per employee. The last penalty we will discuss today is the penalty for applicable large employers who offer unaffordable health insurance to employees. So as you can see, this fine is actually higher than the fine for not offering any health insurance at all. The 2014 reporting fine was $3,000 per employee and has increased by $120 for 2015 reporting to be $3,120 per employee. So keep in mind that the final ACA regulations provide that penalties will not be imposed on entities that show they made good faith efforts to comply with reporting requirements for 2014. The IRS has also indicated that an untimely filed form will not meet the good faith requirement. So should the requirements regarding ACA reporting not be met due to good faith requirements, the penalties may still be waived if the failure was due to reasonable cause. All right, so now we're going to discuss the information that's required to complete specifically forms 1094C and 1095C. The first form we're going to review is the 1094C, which is the transmittal of employer-provided health insurance offer and coverage. So part 1 of this form requires basic contact information for that applicable large employer. Information required includes name of the employer identification number, the mailing address, contact person, and their contact number. It also requires to put the total number of 1095C forms that will be submitted with this transmittal. So now we will go on to review what information is required for Part 2 of the 1094C. So line 20 of the 1094C requires that the total number of 1095Cs filed for this employer and any other aggregated group member. This information can be derived from the system used for filing these forms. So if that applicable large employer is a member of an aggregated applicable large employer group, they will need to check the yes box and complete the group information in Part 3 and 4. So this is on line 21. If they are not part of an aggregated group, they will move on to Part 4 of the form. So just to review and go over what an aggregated group is, aggregated groups are employers with common ownership or that are part of a controlled group. So moving on to line 22. Line 22 is the certifications of eligibility, which lets the IRS know if the employer is eligible for simplified reporting and or the employer mandate transitional relief. The different different certifications of eligibility include. So box A is the qualifying offer method. In order to be eligible for this method, an employer must certify that it made a qualifying offer to one or more of its full-time employees for all months during the year in which the employee was a full-time employee for whom an employer shared responsibility payment could apply. So that is the qualifying offer method, which is box A. Going on to box B, which is the qualifying offer method transition relief. In order for an employee to be eligible, they must certify that they made a qualifying offer for one or more months of calendar year 2015 to at least 95% of its full-time employees. And then the section 4980H transition relief, which is box C. This allows an employer to be eligible under certain conditions. So one of the conditions applies to employers with 50 to 99 full-time employees and or equivalents. And the other condition is for employers with 100 or more full-time employees and or equivalents. And then the last certification of eligibility is box D, which is the 98% offer. Employees are deemed eligible if they certify that, taking into account all months during which the individuals were employees of the employer and were not in a limited non-assessment period, the employer offered affordable health coverage providing minimum value to at least 98% of its employees. So keep in mind that more than one of these certifications of eligibility boxes can be checked on the 1094C. You can have more than one of those. So moving on to part 3 of the 1094C. So the 1094C requires that applicable large employers report on a month-by-month basis. There are different variables that have to be included, which you can see below. So column A, this column requires you to report whether you offered minimum essential coverage to at least 70% of the full-time employees for each month. So you can get this information from the employer, the HR department, or the benefits department. After you report whether you offered minimum essential coverage, column B wants to know how many full-time employees the reporting had on a month-to-month basis. This must be calculated for every single month of the calendar year, and this information can be derived from your payroll department. So column C of the form is very straightforward. It just wants to know how many employees worked for the employer during that calendar month. So again, you can get that information from your payroll department. And then column D is only for applicable large employers that are part of a larger group of aggregated companies. If the employer selected the 4980H transition relief and is eligible for the 50 to 99 relief, they will enter code A in column E. If the employer is eligible for the 100 or more relief, they will need to enter code B in column E. So an employer cannot be eligible for both types of relief. So in section E, if they follow the 4980H transition relief, they will enter A for 50 to 99 or B for 100 or more employees. So the last section of the 1094C is part 4, which is other applicable large members of aggregated applicable large member group. This is where you enter the names and employer identification numbers of other applicable large employer members of the aggregated group. This includes any type of controlled group an employer might be involved in. So next, we will review the information needed for the 1095C, the employer provided health insurance offer and coverage form. This form goes to each applicable employee. So a copy of this form must be given to that employee by January 31st of next year. As you can see, lines 1 through 6 request employee information, which includes the name of the employee, their social security number, and home address, while lines 7 through 13 includes employer information, such as the employer identification number, address, and contact number. Part 2 of the 1095C is the employee offer and coverage section. So this section requires a lot of information. So line 14 requires that you enter a Series 1 code from the instructions for each calendar month, January through December. The Series 1 code indicates the specific type of coverage, if any, offered to the employee spouse, and the employee's dependents. So I'm going to review each code very slowly, so if you want to take notes on that. So code 1A would be the first code. This code is minimum essential coverage, providing minimum value offered to full-time employees with employee contribution for self only. So again, it's minimum essential coverage, providing minimum value offered to full-time employees with employee contribution for self only. Code 1B is minimum essential coverage offered to the employee only. Again, it's minimum essential coverage offered to the employee only. The next code is code 1C, which is minimum essential coverage offered to employee and to dependents. So it's not the spouse, it's dependents. So again, 1C is minimum essential coverage offered to employee and to dependents, and it cannot be the spouse. So code 1D is minimum essential coverage offered to employee and the spouse only. So it's minimum essential coverage offered to the employee and to the spouse. Code 1E is minimum essential coverage offered to employee and to the dependents and the spouse. So it's coverage to the employee, dependents, and spouse. Code 1F is minimum essential coverage not providing minimum value offered to the employee and spouse, or the employee and dependent, or the employee, spouse, and dependent. So 1F, what you just need to take away from that is minimum essential coverage was not provided at all. Offer 1G, or code 1G, is offer of coverage to employee who was not a full-time employee for any month of the calendar year and who enrolled in self-insured coverage for one or more months of the calendar year. So again, code 1G is offer of coverage to employee who was not a full-time employee for any month of the calendar year and who enrolled in self-insured coverage for one or more months of the calendar year. Code 1H is no offer of coverage. So if no offer of health insurance coverage was made, you would put code 1H. And then lastly, code 1I is qualifying offer transition relief for 2015. So this could mean the employee received no offer of coverage, received an offer that is not a qualifying offer, or received a qualifying offer for less than 12 months. So code 1I is transition relief, where the employee received no offer of coverage, received an offer that is not a qualifying offer, or received a qualifying offer for less than 12 months. So the next line on the 1095C is line 15. This line is required to complete only if code 1B, 1C, 1D, or 1E is entered on line 14, either in the all 12-month box or in any of the monthly boxes. So code 1B was minimum essential coverage offered to employee only. 1C is that same coverage offered to the employee and dependents. 1D is that coverage offered to the employee and spouse only. And then 1E, coverage offered to the employee, the dependents, and the spouse. So if you use those codes, you would only need to complete line 14 for using those codes. So employers are required to enter the amount of the employee share of the lowest costly monthly premium for self-only minimum essential coverage, providing minimum value that is offered to the employee. So line 16 is the applicable section 4980H safe harbor, where Series 2 code is required if applicable. An employer will enter a Series 2 code on line 16 to report for one or more months of the calendar year that one of the following situations occurred. So either the employee was not employed, or was not a full-time employee, the employee enrolled in minimum essential coverage offered, the employee was in a limited non-assessment period with respect to Section 4980H, the employer met one of the Section 4980H affordability safe harbors with respect to the employee, or the employer was eligible for multi-employer interim rule relief for the employee. So I'll review codes 2A through 2I. 2A, that code stands for the employee was not employed during that calendar month. So for example, say the employee didn't start until March of 2015 in box 16 for January and February, you would put code 2A. Code 2B, the employee was not a full-time employee. Code 2C, the employee enrolled in coverage offered. Code 2D, employee was in Section 4980H, limited non-assessment period. Code 2E, the multi-employer interim rule relief. Code 2F is the W-2 safe harbor method. Code 2G is the poverty line safe harbor. Code 2H is the rate of pay safe harbor. And then lastly, code 2I is the non-calendar year transition relief that applies to the employee. So again, for part 2 of the 1095-C, there's a lot of information required. The IRS has really thorough instructions, again, with descriptions of each of these codes that's required to be put onto this form. So again, for lines 14, you'll have to put a Series 1 code, and then line 16 requires a Series 2 code. So moving on to part 3 of the 1095-C, which focuses on covered individuals. This section is to be completed only if the employer offers employer-sponsored self-insured health coverage in which the employee or other individual has enrolled. All employee family members that are covered individuals through the employee's enrollment must be included on the same form as the employee. So the information required for these individuals include, in column A, the name of the covered individual, in column B, the social security number for the covered individual, in column C, the date of birth for the covered individual, only if efforts to retrieve column B have not been made. So if column B is left blank, then you have to have the date of birth for that individual. Column D, the employer is required to check this box if the individual was covered for at least 1 day per month for all 12 months of the calendar year. So keep that in mind, 1 day per month for all 12 months of the calendar year. If the individual was not covered for all 12 months of the calendar year, employers are required to check the applicable boxes for the months in which the individual was covered for at least 1 day in that calendar month. So now that we have reviewed the purpose of the ACA reporting, the applicable forms, due dates and extensions, penalties for noncompliance, and the information needed to complete specifically the 1094-C and 1095-C, here are a few steps to help you as an employer prepare for that year-end reporting. So the first step you will want to take is determine whether your organization will have to file based on your applicable large status. Again, an applicable large employer is an employer with 50 or more full-time employees or equivalent employees. The next step is to learn the fundamentals and identify what forms apply to your organization. So the 1094-B and 1095-B forms apply to self-insured, non-applicable large employers. So again, the 1094-B and 1095-B forms are for self-insured companies with 50 or less full-time equivalent employees. The 1094-C and 1095-C form applies to fully insured and or self-insured applicable large employers. So fully insured or self-insured applicable large employers with 50 or more full-time equivalent employees. So once you have determined what forms apply to your company, you will need to find out what information is necessary to collect, where you are going to get that information, and start collecting that on a monthly basis. Or in this case, now that tomorrow is October 1st, you need to start collecting and gathering existing data from January 1st of 2015 to date. So, and another thing you will want to do to prepare for year-end reporting is you will want to communicate with your employees that they not only need their W-2 at the end of the year to file their income taxes, they're also going to need either that 1095B or 1095C form to file with their taxes as well. So just make sure you send a memo out letting your employees know that they will need that employee with their W-2 to file those income taxes. So with that being said, we at Extra Help actually have an ACA tracking and reporting tool that can help you with the burden of this task. So this tool includes an automated company ACA expense optimizer, simulator, and analysis. So what this does is it runs an analysis to determine that you are, as an employer, in compliance with the Affordable Care Act in regards to the affordability, the measurement periods you have for your employees' enrollment, and cost. And it also will show you possible fines that can be incurred for not being in compliance with the Affordable Care Act. This tool has an automated notification, documentation, and time, date, event history tracking for ACA company policy notification. So this is when an employee gets added to the system. They will go through the process and it will send them basically a notification letting them know that their employer does offer health insurance to their employees. And it also will do employee eligibility notification. So once that employee becomes eligible for health insurance, this system will notify the employer and the employee that they are eligible for health insurance and the process of accepting or declining that health insurance coverage. So again, it tracks the employee's offers and responses, whether they accept or decline that health insurance coverage. And then it has a period tracking and rules engine. So we input all of those measurement periods, the weighting, the measurement, stability, and administrative periods for your health insurance plan. And it has company and employee ACA status real-time reporting. So we would do the year-end reporting of the 1094C and 1095C forms, and we will also file those forms to the IRS. So it also has an automated benefits enrollment using HIPAA 834 enrollment data specification. So this shows, this is a little graph I like to use. It shows our process in the reporting. So the first step would be the ACA company policy notification, and then the employee would get a notification once they become eligible. We can then track the employee's response. We could track when they open that eligibility notice, how many times they open that eligibility notice, and then it also has the period tracking and the rules, and then the reporting and support for this feature. So if you are interested in learning more about the service that we offer, you can contact me, and my contact information is below. So that ends our presentation, and I will now answer a few questions that have been posed throughout the webinar. Please keep in mind that we will not get to all of the questions asked, and if I did not get to your specific question, I will contact you directly to address it. So if you have questions, please send them through the messaging feature of GoToWebinar. Let's see. So one question was in regards to for 2015 reporting. So calendar year 2015, January of 2015 to December of 2015 will be the data and information that will be reported on January 31st of 2016. So that is the reporting for 2016. Calendar year 2015 will be sent in January of 2016. Okay, let's see what other questions we have. So one question is, if the employer has 100 or less full-time employees and only offers a supplemental plan, then does the employer have to file anything? This I'm not 100% sure on, and what I'll do is I will look into it and get back to everyone in regards to this question. But how I understand it, they do have to report for that insurance. But again, I will look into it and make sure I get everyone the correct answer on that. Any other questions? Again, if you have questions, you can enter those into the chat box, the messaging box in the GoToWebinar. So I will give about 2 more minutes for questions to be posed. All right. One question is, a question we're getting is, can you get a copy of the presentation? I have actually recorded this presentation, so once I stop the recording, we will put it on our YouTube channel, and I'll send out a link to all of the attendees today where they can access that presentation. Let's see. So one question is, would letter from insurance provider serve as employee eligibility notification? You will want your employees to sign off on that letter from the insurance provider notifying that they were aware that you did offer health insurance, just because you don't want them to go to the marketplace to get a subsidy or a tax credit. So that is something, if you do have that letter and you want hard copy of it, you would want them to sign off on it so that they were aware and knew that you did offer health insurance, because in the long term, you do not want to get fined for that. Let's see. Another question is, do you have to be an Extra Help payroll client to get the ACA reporting service? You do not have to be a payroll client in order for us to do that for you. All right. Any other questions? I'll give you guys a few more minutes. All right, so that is all the time we have for questions. Again, if your questions were not answered, I will do my best to reach out to you via email to address any questions. Let me actually go back a page if I can. I will send everyone my contact information too in case you come up with additional questions or want to talk about the ACA reporting and tracking services by Extra Help. So again, thank you so much for attending, and I apologize for the technical difficulties at first, but that concludes Extra Help's Workplace Excellent presentation today. Thanks again for coming on, and have a great day.